Hi there, very good morning and welcome to Opening Bell with me, Stacy Pereira. I'm here to take you through all those news and cues that need to be watching out for and also that could go on to impact your trading days. So stay with us as I quickly give you a roundup and a recap of how we left by last week, and seemed like it was another bumper week for the Indian equities. 23,000 levels is what we did manage to touch those highs, but not for too long. So we didn't close above that 23,000 levels, but this rally mostly driven by these good Q4 numbers that we're seeing from most of the corporates that are coming out, and of course all the volatility before the Lok Sabha elections, which are due for June 4th. Now we are seeing further easing of FII selling, which is consistent with the DII's buying as well, and that is giving some solace to the markets, we would say. Of course, there was that RBI's bumper dividend payout that came in as a big boost even to the banks, and we saw the banks participating post that, and of course a whole host of macro data that will be due through the course of this week. We have the auto sales numbers that will come out. You also have the GDP estimates, the Q4 GDP estimates that will be put out. So all of that will be interesting to track, and of course the macro cues and the global cues as well showing us some bit of direction. So can we go upwards from here? Well, remains to be seen, but 23,000 levels is what we've already surpassed. So now it only seems like it can take us higher from there. But we'll be discussing all of that and more. Let me first take you through all the top headlines. Now, Wall Street closed higher on Friday. The Nasdaq hit a record high led by post-earnings rally in Nvidia, outweighing fears of a Fed postponing its interest rate cuts. Asian markets trade higher following a positive close on Wall Street. The GIFT Nifty is also suggesting a positive start for the Indian equity markets. Crude prices have rebounded off their 3-month lows on Friday. Brent crude trades around $82 a barrel ahead of that crucial OPEC Plus meeting, which is scheduled for the 2nd of June. Gold, meanwhile, is range-bound above that $2,300 an ounce, even as the Fed's rate trajectory remains uncertain. Divi's Labs has delivered a strong show in the fourth quarter. Revenue growth has beat estimates, while margin recovers to over 30% for the first time in the 5 quarters at over 31%. In key earnings today, track NMDC as well as LIC, which will be putting out its fourth quarter numbers. And economic momentum of the previous fiscal continues into the first quarter of FY25 with an uptick in consumption-led growth as well as business activities as per government's monthly economic review for the month of April. The report also acknowledged substantial challenges from commodity prices volatility due to the ongoing geopolitical concerns. Right, so just there 7 minutes to go for opening bell on this Monday morning, and we're going to see whether we manage to go back to those 23,000 levels and perhaps sustain and carry on from there, because those seem to be those likely resistance levels now that we've psychologically compelled and gone over that 23,000. Now it remains to be seen how we manage to stay over it, or if we break down lower, then there is that support at 22,800 also. But let me also take you through quickly some F&O cues. Well, according to that monthly option data, we did see that 24,000 strike now holding the maximum call open interest, whereas on the flip side, the put side, we saw maximum open interest now being observed at that 23,000 strike, which was so far that call strike that we've been seeing all this while. If you look at the PCR, the put call ratio, now that indicates that mood of the market, which seems to be still in that positive or bullish territory, we would say. That one fell to about 1.14 versus the 1.37, but it's still above those 0.7 to 1 levels, which clearly indicates a bullish sentiment in the market. If you look at the VIX, now the volatility index has been seeing some swings, but has managed to sustain above that 21 mark for the 4th consecutive session. And experts feel that unlikely this is like going to go down anytime soon, till at least we overcome or we are done with the exit polls on 1st of June and then the results finally on June 4th. The India VIX closed on May 24th above that 21 levels at 21.71. That is almost a 1.5% of gain versus the 21.38 levels that it was. For the all of last week, the VIX actually gained about 5.77%. So it's fourth week of gaining, or rather above that 20 levels. If you look at the stocks which are in the F&O band, now NSE has gone on to add again Biocon, GNFC as well as Vodafone India. So these three stocks are back in the F&O ban list for May 27. Retained in the ban list is Bandhan Bank, Hindustan Copper, India Cements, Nalco, Piramal Enterprise as well as Punjab National Bank. Whereas this time coming out of this ban is Aditya Birla Capital, Balrampur Chini, India Energy Exchange, Metropolis Healthcare as well as Z Entertainment Enterprise. So these are the stocks that are now out of this F&O ban list. Let me also tell you who's buying and who's selling the most number of stocks. Well, we did see some good hectic activity of FIIs returning to the Indian markets on Thursday, but then that was not really sustained, and on Friday again FIIs became net sellers, selling equity close to 944.83 crore rupees, whereas the DIIs were the ones again doing the heavy lifting, pumping in close to 2,320.32 crore rupees of equities, according to the provisional data that is put out by NSE. Let me also tell you the big stocks that are going to be putting out their earnings. We're going to see LIC, or Life Insurance Corporation. There's also AstraZeneca, Pharma. There's Borosil Renewables. Among the newly listed ones, you also have Flair Writing. There's Natco Pharma as well as Nalco, which will be putting out its numbers today. So all of those stocks we will be discussing in detail, and also a couple of brokerages that have come out with reports on stocks that have put in. Remember, we are sitting in the last leg of the corporate earnings, of Q4 earnings, as well as a whole host of macro cues that we need to be looking forward to. So let's get discussing, not just all these stocks, but also the strategy that you need to apply in. This is the last monthly F&O expiry week as well. So for that, joining me now is Kunal Rambhia. He's a fund manager at the Streets. Good morning, Kunal. Always a pleasure to have you with us on a Monday morning. Well, this is, we have quite an interesting setup when it comes to trade this week. We are sitting at an F&O monthly expiry week. There's also a whole host of macro cues that are coming in that, we need to be looking forward to. The Q4 GDP data that will be out later this week, but also the impending or the last phase of the election as well, that has got a couple of investors, we would say, or rather the street, a little jittery at this point. So how is one to be trading, especially what would be that strategy you would recommend at this point when you look at the Nifty, because we've been seeing high formations at least for 10 days in a row now for the Nifty. So what would be that F&O trading strategy that you would adopt for this week for the Nifty?
Morning, Stacy. Morning to all our viewers. Thank you so much for having me on the show. So if you look at the overall Nifty formation, it's been almost 2 months of consolidation. To be precise, we made a high somewhere on the 9th of April, and that high was around 22,770. And since then, it was in sideways consolidation or a broader range. And I would define this range as 22,800 to approximately on the lower side, 21,800. And we saw those 1,000 points of ranges, and eventually, even at the end, finally, we saw this breakout coming on 23rd of May, where the Nifty was up by around 370 points, and now it's entered into a new territory, new zone. So as you rightly mentioned in your commentary also, 22,800 seems to be a good support. Any close below 22,800 can be worrisome. Otherwise, till then, I'll be adopting the buy on dip strategy. On the higher side, I'm looking out for the immediate levels of around 23,250 as a first target, followed by 23,750 kind of levels.
Right. Kunal, what about the bank Nifty? Now, that one we did see some bit of participation, especially from the likes of an HDFC Bank, which actually pushed markets higher in those last 2 trading sessions. At least we did see a component like HDFC Bank coming back and participating. But are we seeing higher highs here as well, or what would be? It has been trading above all of its key moving averages, which looks like a good sign. So would you still say that there is enough momentum for the bank Nifty also to head towards those 50,000 levels?
Absolutely, Stacy. I'm very bullish on Bank Nifty. If you look at the higher highs and higher low formation, it started precisely on 29th of Jan, where the low was around 44,100 kind of levels, 44,500 kind of levels. And since then, though the volatility is very high, but yeah, we are seeing sequential higher tops and higher bottom formation. Presently, it's trading at 49,100. I think this 48,000 is a good support mark to keep in mind. On the higher side, 50,500 is a level which I'm eyeing on. This entire trend, which is going on since almost now a year, is still looking positive from Jan 2024 so far. The midterm trend is also positive. So again, buy on dip strategy would work really good on Bank Nifty. If someone wants to be a little conservative, then I'll definitely ask the trader to go ahead with trading Nifty. But otherwise, Bank Nifty seems to be well poised for at least 1500 to 2000 points rally from the present levels.
Nice. So there we are at opening bell above that 23,000 levels in the green. So it seems like what we wanted at least to push those levels higher, or at least manage that momentum to sustain through the trading session. But at least for opening, we are at those 23,000 levels. Even the sensex there nicely about 250 points of gains coming in for the sensex. So 75,600 levels is where the sensex is trading, about 0.3% gains for the sensex, whereas the nifty also about 0.2%. Even if you look at the broader indices, both the nifty mid-cap as well as the BSE small cap are showing some pretty much mirroring the benchmarks. You would say the BSE small cap index, they're almost 0.5% and more of gains coming in there for even the broader indices. So those two are also in the positive this morning. The bank nifty, like we were just saying, 49,100 levels is where we are at, 0.2% of gain coming in for the bank nifty as well. Let's look at the other components. It will be interesting to see which are the ones that are sectorally, which are the sectors that are doing well. Nifty IT also managing to hold out there. Even though given the global environment, you're still seeing, some bit of action coming in there for the IT index. Nifty Pharma is what we're going to be discussing in detail as well, because there are a lot of earnings that have come out and positive brokerage coverage is on these particular stocks from the Nifty Pharma pack. So that one also close to 0.5% of gain coming in there. For the FMCG basket as well, you're seeing some positive momentum this morning. So we're starting the Monday morning with pretty much most of our sectoral indices at least in the green for now. The advanced decline ratio also clearly shows that we're at 1,502 versus the 513 when it comes to advanced versus decline. So clearly a good momentum there. One would say 1:3. The Nifty Auto Pack, now that one is seeing some bit of pressure, rather trading flat, but we are in a week where we're going to see auto sales data that is put out by most of these OEMs, and that is when you see the Auto Pack really, step on the pedal rather. So the auto index there seeing some bit of pressure this morning, but the realty index there almost, over 1% of gain coming in there for the Nifty realty basket. So pretty much most of your sectoral indices are in the green, besides auto is what we looked at. But here on your screen are the top gainers. You have Divi's Lab, like we're talking about, a lot of brokerages coming out with positive calls on that one particular counter. So 3% of gain for that. Adani Ports also after that whole sensex rebalancing that has happened. So this one also there in the positive. Hindalco continues among your gainers. There's Tata Steel, JSW Steel, NTPC. So a whole host of metal names that are also making it to your gainers list. Bharti Airtel, HDFC Bank once again, as well as Apollo Hospitals are among your top gainers. On the flip side, you're seeing Adani Enterprise see some bit of profit booking, we would say. So that one in the red. Eicher Motors, another one from the auto pack, which is down and about. And of course, you have Wipro, which is perhaps reacting to the fact that Adani Ports has, replaced it on the BSE. ONGC and Hero MotoCorp are your other laggards in trade. Let me quickly go back to Kunal and get his view on the metal pack, because we are seeing, most of the gainers they're coming in from the likes of a Hindalco, JSW Steel, Tata Steel, all of them making it, and consistently we would say, all of last week also we saw good gains coming in there for the Nifty metal index per se, but also the components gaining quite nicely in trade. Do you think there is enough and more room to be entering if somebody wants to look at metal stocks at this point? Is there room, or do you think they are also among those overvalued or overstretched kind of stocks?
So, Stacy, if you look at the overall formation again, right from November 2023 so far, the entire pack is actually making higher highs and higher lows. And if you look at the trend, it's very much strong, very much positive. Even at the present levels, I don't think it's gonna pause. It's gonna pause here itself, or will enter into sideways consolidation, because counters over the entire range of around 5 to 6 months have seen a lot of time consolidation, also time correction, also, which is a consolidation kind of formation. So yes, I'm definitely bullish on it. If you look at the commodity pack itself, the base metals are also doing quite a good on NCX front also. So my top pick among this is Tata Steel. Now, I don't really recommend anyone to initiate a buy on the breakout, because these counters are trailing counters, right? So whenever the counter comes down by say 2.5%, kind of initiate a buy at that level, and then keep riding the rally. We should not be buying these as a momentum trade. We should rather be accumulating this on correction and ride the rally. This is how I'm approaching the entire metal pack.
Right, so you can ride this rally and rather accumulate at this point. Kunal, do wait on. Let's also address a couple of other stocks. And like we were saying, among our top gainers was Divi's Labs. This because they came out with their Q4 numbers, where profits are up by about 67.6%, coming in at 538 crore rupees versus the 321 crore rupees. Revenues are up by 18% at 2,303 crore rupees. EBITDA is up by 50.1% at a good 731 crore rupees, whereas the margins also are at 32% versus 25%. Now, of course, there are brokerages that have come out with reports, one of them being Jefferies. They continue to have a hold call with a target raised to about 4,050 per share at this point. They say the Q4 numbers are pretty much ahead of estimates, as the custom synthesis sales have surged by about 47% on a YOY basis. The EBITDA margins too have risen to a multi-quarter high in this consequence. So you're seeing that 32% versus that 25% when it comes to margin. The custom synthesis has benefited from this whole Q4 seasonality, as well as the two commercial contracts for the company. The company looks like it is set to spring back to its growth path, is at least what Jefferies is saying on Divi's Lab. Interestingly, the company has also come out with a whole host of how they want to take this forward. And not just Divi's Lab, we were talking about other pharma companies as well, who've really outshot in this last whole week, we would say. You had Aurobindo Pharma come out with its numbers. Their profits have zoomed somewhere close to 79.6%. You have their revenues that have risen by 17%. EBITDA here as well has spiked to about 68.3% at 1,687 crore rupees, and margins have jumped by about 677 basis points to 22.3 versus 15.5%. So those are two pharma stocks that put out their numbers, and we're seeing the reactions coming to both quite differently, rather, on the counters, we would say. Aurobindo Pharma also had a US FDA inspection that happened, which they've notified the exchanges about. So perhaps that's why that stock is reacting differently when it comes to their earnings. But Kunal, maybe you can come in on the pharma pack right now and what we're seeing them do. The likes of a Divi's Lab seeing some good brokerage results, brokerage calls being put out there for this particular counter. But how is one supposed to be trading the whole pharma pack at this point in time? Given the markets are at these all-time highs, would pharma then become something that is interesting, or where you could actually find value and park your money in?
So, Stacy, if you look at those couple of counters in the pharma pack, like Sun Pharma and others, they have been doing quite a good job in the entire rally, right? They have been making a sequential higher top, higher bottoms, and the trend just continues. But if you look at the Divi's Lab specifically, I would take you back to those levels of May 2022, where in the month of May the counter was down by around 18%, and then it entered into sideways consolidation. This massive consolidation is almost of around 2 years. And what we witnessed in the last week was it gave a first breakout of this entire broader consolidation, and that breakout was placed at around 4,050 to 4,075 kind of levels. today, due to this result announcement, obviously we always believe the fact that market discounts everything. It's up by around 5%, 4.5% right now, almost 5% now. I think this can now be a buy on dip candidate. One can definitely accumulate. The support on the chart is around 4,075, which was the breakout level, and the targets on the higher side can be as high as 4,750 to 5,000 levels. Now, this time giving on a weekly chart, this view is definitely a positional view. One can definitely accumulate this counter as a buy on dip.
Right, so you can look at Divi's Lab right now on a buy on dip strategy, although today that counter is clearly reacting to its earnings and the whole host of brokerages that have come out with positive results. I will try and get a couple of queries answered by Kunal before we move on and get our other guest on board as well. Kunal, quickly, maybe you can give your view on Gillette India. Yagnesh wants to know your view from a long-term investment perspective, especially because he's currently holding shares about for 6,500 rupees. So what would be your view, or rather if you could give him a target and stop loss that he could look at for Gillette India?
See, overall Gillette trend is definitely positive, but the chart on the weekly chart it's suggesting that December 2017 the counter was near to 6,500, and again presently after it's been almost 7 years, the counter is still at around 7,000. So it's more on a sideways consolidating counter. Trend is definitely positive. From the long term point of view, one can certainly hold on to it. The immediate support which we need to keep in mind is 6,200. Obviously, it's going to be far away due to less volatility and a trending counter. So 6,200 is a support which one can eye on and hold the counter. I think the near-term targets can be 7,500 to 7,800. Please revisit Moneycontrol again and take the opinion once the price reaches that level.
Right, so we definitely put out the disclaimer as well, but those are I hope that answers Yagnesh's question on that particular counter and whether he should be looking at Gillette India or what should be those levels that he should be tracking. Well, let me also take this discussion a little broader and look at the macro cues that we will be tracking through the week. We are going to be putting out our GDP numbers and how much of that is really going to impact. Are we in those levels? We've seen a good RBI dividend payout, that announcement coming sometime last week, and how that has really cheered and enthused the markets as well in terms of how India's macros really stand vis-a-vis other peers at this point. So let's get discussing what really we could expect from this GDP number. Are we still staring at those 7% levels? Of course, we're perhaps not going to touch that 8.1% like what we saw the previous quarter, but what are the levels that we could be expecting? And of course also how markets are then going to be reacting to all of this. Joining me for that is Hement Shah. He's a fund manager at Seven Islands PMS. Good morning, Hement. Always a pleasure to have you with us. And we were talking about how India perhaps at this point really does seem to have all the macros in its favor. You would say we are also seeing that bit of FII action, although there have been consistent outflows. There is enough and more reason for them to be coming to India. If you look at from a broader perspective, most of if we do hit that Q4 GDP estimate also somewhere around those 7% odd levels, or 6 to 7% levels is at least where most economists are pegging it at this point. Do you think what is that one factor that can really be that factor where everyone says, okay, yes, it is time to take note at India, and what will be that one reason which is really going to work in our favor?
Thank you, Stacy, for having me on your show. I think the only reason for currently is the elections. All the numbers are just the numbers, but the main event is election. But having said that, as you said, is right. Yes, India is moving in the right direction of strong GDP. I think we do expect 7.2% of the GDP for this quarter also. And going forward in the next 2 years, if the election results are quite positive, if the policy stands as per the past on the track policies, I think we can see good improvement in the GDP. And as you rightly mentioned, the RBI dividend will play a big role going forward for the India space, India infrastructure space, government spending space. It has given a good breather to the government to spend more. So overall, yes, positive, but I think the only factor right now, as you said, is the election results.
Right.
Post.
In fact, I'll even come back to you on, there was a query also that said we're not seeing IT or even private banks, which hold the maximum weightage, we would say, in terms of where the Nifty really moves forward. But those stocks aren't really the ones which are pushing the needle. Yes, we saw one day of trade where it was the heavyweights that did all that lifting and, pushed the Nifty towards those 23,000 levels. But otherwise, do you think the large caps are, they've somehow taken that slow lane and it is pretty much most of the action in the mid and small cap space? Would you agree, or do you have a different view on that?
No, I absolutely agree. So till today, we have seen a great performance from the mid cap and small caps. But having said that, the valuations in the mid cap space and small cap space has touched and I think an abnormal level of it doesn't match with the fundamentals somehow, we feel, in many of the stocks. Whereas in the large caps, we do see a good opportunity. Say, for example, the telecom space is buzzing, and I think it is poised for a very good growth. Whether it's a tower company, whether it's telecom providers, service providers, or the hardware for manufacturers for 5G and 6G going forward. So we do see a great opportunity in telecom, in small cap, mid cap, as well as large cap, Stacy.
So it needs to be a mix, and you need to be that, the allocation needs to have a good, asset allocation needs to have, after judging pretty much each and every stock, become more stock specific, at least in this market. Let me quickly go back to Kunal and get a couple of queries answered. Virupakshi wants to know your view on Torrent Pharma from a long-term perspective, from a 1 to 2 year perspective. How is one to be looking at Torrent Power? Sorry, not Torrent Pharma, I beg your pardon, Torrent Power.
See, Stacy, overall, the formation of the torrent power is again very much positive, and the trend is very clearly bullish. But at the same time, one needs to trail the stop loss, right? So, on the long-term perspective, I think 1250 is a level one needs to keep an eye on. Till the time the counter remains about 1250, I think he can comfortably hold on to the position. On the higher side, if the counter manages to cross around 1600 mark, then 1750 to 1800 is a likely level. At that time, I would advise a viewer to trail the stop loss to near to around 1500 levels and hold the position. Trailing stop loss is, I think, something which will work really good strategy on Torrent Power.
Right. So trail that, stop loss is what you would say on Torrent Pharma. Let's also look at Cochin Shipyard, because this is another counter that came out with its numbers, and of course we saw its profits spike by about 558.1%, coming at 258.88 crore rupees versus just a 39.3 crore rupees. So multi-fold spike they're coming in for the bottom line. Revenues too have jumped by about 114.3% to 1,286 crore rupees versus the 600 crore rupees. Now, this has been quite interesting, right from a Cochin Shipyard or a Mazagon Docks. We've been seeing some interesting, way that these stocks have been moving also, and how one takes a call on this. So, Kunal, what are the charts, saying for Cochin Shipyard or in general shipping stocks? In fact, that's a query also that is coming in from Alex. And how is one to be looking at shipping and logistics sector at this point? Are there any interesting picks that you have within this space?
See, Stacy, these are the counters like Cochin Shipyard or Mazagon Dock or HAL for the sake of it. Look at the counters. They have been in absolutely strong trend. And, whenever I look at the chart on a lighter note, I always hear from the chart saying that you dare exiting and will make you afraid of missing out the new rally again. So, yes, the Cochin Shipyard is also one of those counters. Just trail the stop loss, hold the position. As of now, in-house, we have kept the stop loss of around 1750, I mean to say. 1750 is a trailing stop loss. With that, one can certainly hold on to the position. If the counter comes near to those levels, think of adding more position also and hold on till the time the stop loss is not triggered. In the entire pack, not only just shipping or even the defense, just keep trailing the stop loss. Whenever the stop loss is triggered, just take an exit no matter what, and we'll be able to enjoy that massive wealth creation opportunity in these counters.
Right. In fact, Hement, coming to you when it comes to the PSU pack, for the likes of an Ircon or RVNL, we've been seeing them touch some good levels, but Elcon in fact just came out with its numbers also, and it didn't show that the orders actually coming down. So that could be a reason for worry, and you could also say that by now the valuation seems quite stretched. So how would you be judging when it comes to railway or these infra PSU stocks? Do you think there is still room, or one really needs to be doing this cherry picking and not go with the herd? Because in the run up to the elections, we did see most of these PSU stocks really touch the roof. So how should one, or what should be the strategy when you're looking at in particular these kind of PSU stocks, which are one would say they are quite cheap because they are readily available, but they also by now that price seems to have run up quite a bit. So would you agree that the valuations are a bit stretched?
So yes, as you said, Stacy, the valuations are stretched, but the potential is immense. I think we have not seen this kind of capital expenditure by the government in last maybe 20-30 years in this railway space particularly. The objective is very clear. I think we are in the middle of the growth, I would say, but for the investors, we have, I think from the investor's perspective, I think we have discounted 2 years forward, I guess, in terms of earnings. So FY27 is discounted, and I think long-term investors can make good money out of it. But I think most of the best of the time or best of the wealth has been already made in last 2 years. That is our view. Right. If some investor is holding, I think it's better to hold. And I think Kunal rightly said, trailing stop loss should be activated for even the long-term investors. I think we should hold rather than taking fresh positions. Right. But having said that, we are still positive on the railway sector as a space.
Right. What about the other sectors? What is among your list for FY25? What are the sectors that you think are going to be the ones that will take not the markets to newer highs, but also show that kind of outperformance themselves? What is on your list when it comes to sectors?
I think, Stacy, the manufacturing sector will outperform. Okay. This is what looks like. Even if you see the Q4 numbers, the manufacturing sector and space has posted tremendous results, very surprising results rather. And even in that space, I would say the multinational companies has posted even more stronger growth, even better results in terms of margins and even in terms of volumes. So, I mean, that's a very good space should be for the investors, the manufacturing space, the capital goods space.
Right. So interesting. Capital good manufacturing is where Hement is seeing some more activity rather happening through FY25. Quickly, another question to Kunal. Then Alex wants to know your view on JSW Infra for the long term. Since we are talking about these, what does this particular stocks chart really say, JSW Infra?
Stacy, so the counter got listed somewhere in October 23, and today, in fact, just now it has made a new all-time high. The trend is very much strong and very much positive. The Fibonacci extension targets on the higher side are as high as 325 to 330 as a first target. That's also very conservative. So I'm very bullish on it. One can trail the stop loss. One can initiate the new buy. In fact, the stop loss can be 275 and the targets can be 325 as of now. Keep visiting this target, stock again and again. Keep trailing the stop loss. I think this can create massive wealth for the long-term investors.
Right. One finally also on LIC, since it's going to be putting out its numbers, and the whole insurance space has seen some regulatory moves that have come over time now. The LIC particularly, Kunal, what is your view, and how is one to be looking at this stock ahead of its earnings?
Almost 3 months of consolidation came to an end on 21st of May. Stacy, and this day, the counter was up by around 5%, giving a very clear breakout of around 1020. Presently, it's trading at 1035. I think it has already indicated the good side of numbers coming today. With the stop loss of around 990, one can certainly buy this counter, and the targets can be 1125. And above that, it might just enter into the new range. So the targets can be as high as 1350 also.
Right. Kunal, any other picks that you have for our viewers before we let you go? Anything that is caught your attention or is on your radar?
Certainly. So on Friday, I saw the first breakout coming on National Fertilizer. almost after 4 months of consolidation, this counter has given a clear breakout. Today also, I think it's up by around a 2.5% in trade. One can initiate a buy on National Fertilizers. Stop loss can be 100 as of now, and the first target can be 120 followed by 135. The second counter is Phenotix Chemicals. Now again, this counter is a very trending counter, clear high top, high bottom formations. So with the stop loss of around 370, which is the, my mistake, the FCL stop loss is 460, and the targets can be as high as 525. And the third counter is IOB, Indian Overseas Bank. Now, I shortlisted this counter right before the show itself. Look at this, it's up by around 4.5%. I'm very bullish on this. It's giving a clear breakout today with the stop loss of 66. One can initiate a buy, and the first target can be 80. Again, in all three counters, I'll advise all our viewers to trail the stop loss rather than enjoying the short-term profit. Let's focus on riding the rally and hold the position for long time.
Well, interesting picks there from Kunal, but let me thank both my guests, Kunal Rambhia from the streets as well as Hement Shah. Thank you so much, gentlemen, for giving us your time and speaking with us. We do hope that we will, touch base sooner, but for this week, we hope that we've answered a couple of those queries that have come in, and also to all our viewers, keep sending us those queries and we'll try and get them answered by our experts. But for now, it's a wrap and a goodbye from the entire team that puts this piece together. Thanks so much for watching. Also, do please post us your feedback in the comment section below and follow us in the link at the bottom of your screens. For all your other updates, stay tuned to moneycontrol.com as well as the Moneycontrol app.